Well, these in the area of what's personal expense and what's a deductible business expense, there's some specific rules. The first thing you have to look at, not to get too technical, but no, no, just layperson would know this. Um, Under Section 162 of the code, it lays out what is deductible for business, and then pretty much nothing is deductible for personal unless it's specifically got a code section that deducts it. So everything's for business is deductible unless it's specifically excluded. So that's kind of how it works. So you look at what's ordinary, what the standard is. Is it an ordinary necessary business expense? And then if it is, it's deductible. Doesn't mean you might not have spent the same money on that same thing even when you didn't have your business, but if it's ordinary necessary business expense for your business, then it's deductible. And then we look at, there's these special reimbursement rules about how to, when you spent money personally, how to allocate some of that and reimburse yourself, have the company reimburse you so you get that deduction on the books of the business.
Yeah. Like many people may feel overwhelmed by taxes. What is your best piece of advice to realtors who feel overwhelmed by it?
For realtors, I would say hire a tax advisor, not just a tax preparer. When you're making enough money to have to worry about taxes, hire a tax advisor that's going to, probe and ask the right questions and set up the planning strategies. And, your tax advisor will be following up and making sure you're answering their questions and you're providing the information they need so they can structure the strategies. If you just go with like a do-it-yourself or a tax preparer or a friend or a relative to prepare your tax return, they're not going to spend any time figuring out the strategies. When we have a realtor client, we spend most of our time figuring out the strategies, implementing the strategies. That happens all year long. It's just a little bit of time in the February, March, or April preparing their tax return. But by then we totally know what we're going to deduct. If we know the documentation, we have all that tuned up before we ever prepare the tax return. And that part where it's the implementing of the tax strategies, hardly anybody knows how to do that. Most CPAs don't know how to do that. We've developed all these things over time about an efficient way to implement the tax strategies. So it is totally overwhelming. It was overwhelming for me the first time I implemented a tax plan. I had to spend lots and lots of hours, but now we have it in a real efficient process. We do it for, lots of realtors, and we do it over and over and over again.
Mm. For those who are not aware, could you explain what makes tax planning different from tax preparation?
Sure. Yeah. Tax planning happens during the year, and it's implementing the strategies, and it's making a structural system that captures these deductions. So tax prep, that's just you send your information to the tax preparer and they put it on the tax form, and that's fine, but they aren't doing anything to make sure you would have had all the deductions that are available to you as a realtor, and they aren't doing anything different for you as a realtor than they are doing, for any other person that's just any other kind of business. So, or any other tax return, they're just taking the information you gave them and putting it on the tax return.